that I think should help us all. We should all be considering, do we have our money in the right place? So if you've got just a local checking account and savings account, that's great. We all need those items. But any extra money doesn't need to be in your local bank. No offense to your local bank, but most local banks are not offering the interest rate that a lot of our online larger banks are offering. Now, I'm not talking Bank of America here, folks. We're talking Ally, Synchrony, SoFi. There's a lot, or Sophie, however we want to say that. There's a lot of great online accounts that are offering, guys, up to 5% interest for some CD rates, some savings account rates. Your local bank probably in the 0.5% range. My local bank is in the 0.5% range. So it's a moment where you need to ask yourself, what's my comfort level on how much money I keep in the local bank, and how much can we just move to an online bank? Now, comfort level shouldn't be too much of a concern. If you've never used an online bank, it takes 2, maybe 3 business days to transfer money from your online savings account to your local checking account. Some of these online accounts even allow you to write checks and use ATMs. So you could literally have the money right now if you needed it to. It's not like it's being sent to Switzerland and being put in a Swiss bank account that you're going to have to fly there and get. It is not that hard to touch, but moving it there makes it a little hard. It makes you feel like it's a little harder to spend, possibly, but can be much more in your favor to earn 4%, 5% interest over 0.5%. To put that into perspective right now, the stock market, it's not even making 5% this year. It's we've had a better month. April has kind of put us in the upward trend, but we're still not back from where the stock market fell from last January. And there's a lot of folks that you're still waiting to see your retirement come back from last January's fall. We aren't there. So these are what we're going to talk about tonight. They're an FDIC insured accounts. They're not playing around in the stock market. They're just savings accounts earning a good interest rate. So just some things to consider as we dive in tonight. And hello to everyone that's joining me. It's good to see everybody. Wendy from Louisiana and Karen in Northeast Florida. It's good to see everybody from all over. It's always fun. You want to learn how to save. Well, that's awesome to have you join us. You have a bank account and a $500 max credit card and want to figure out how to save more. Every little bit is the way to do it. That $500 max credit card is a good plan too, to keep you from overbuying when it doesn't fit in your budget. And hello, Wendy. We haven't seen you in forever. It's good to have you join in tonight too. And Kimberly, we used to live in Bluffton. So hello to you from Bluffton, South Carolina. We used to live in Old Town Bluffton. Okay. And Anthony in Tampa Bay. It's good to see everybody. So to dive in, I want to start off, I always share this website. It is my go-to site for finding rates. And that is bankrate.com. So if you're wondering, like, Jenny, how did you find these? I went to bankrate.com. They don't have all of them. A couple of the things I'm going to show you. But we're just talking accounts, and I want to show you the things that you want to look for when you're trying to compare apples and apples of a new bank account. So first off, on this piece of paper, or this screen, we have to print this out if we want to put it on paper. This screen, there are 2 big columns that are important on any of these, and technically what we're looking at is a CD list right now. We'll talk about that in a minute. But these columns are the same whether we're talking a savings account, a checking account. 2 big important columns. The first one right here is the interest rate that they're offering. And the second one is the minimum deposit. And so for a lot of us, our shark has decided to kick on there. Sorry, our little robot guy. For a lot of us, this minimum deposit column is gonna get it immediately is going to wipe some ideas out of the playing field for you. You're like, yeah, I don't have $1,000, but that'd be great if I did. That's okay. Don't get discouraged. Just keep scrolling. Then all of a sudden we're going to find, hey, here's an offer with 5.15% interest and 0 minimum deposit. That's what I want to see. Now, if you've got a chunk of money put aside, that minimum deposit might not be a deal breaker for you. But for a lot of us, it is. Maybe you've got $200 put aside. That 0 minimum deposit, you're still in the playing field to be able to use that account. The other plus side, so let me just to show you too, I am technically on CD rates right now, but to come over here, this is the main homepage. You're just going to click on what you're most interested in. So let's talk high yield savings accounts. Even here, that $1 minimum balance, it's very doable. But the reason that that's important too isn't that, maybe you do have a little bit of money right now, but what happens, this is our savings account. What happens if you're in our boat and somebody hits your 18-year-old and doesn't have insurance? Well, you're going to get to deal with that, right? Or leaves the scene. We dealt with all of that in the last week. So if that is what you're dealing with, I need to know that if I access my savings, I'm not going to get a fee, right? My goal is to make money on my savings, not to spend any of it on banking fees. So when you look at this and you see these $0 minimum balances, more often than not, I'm not going to say it's 100% of the time, but more often than not, if they have a 0 minimum balance to earn the savings rate, that interest rate, they typically do not have a balance requirement that is going to kick in a fee. Now, there are banks that do, and I'll show you one. It's offering a really great rate right now. That's UFB Direct. So you can grab this UFB Direct account. It's offering 4.81% interest, and you're thinking, this is wonderful, until you scroll down and you start to read the fine print. No monthly maintenance fees with a $5,000 balance. Well, that's wonderful. Most of us don't have that. Otherwise, you're going to pay $10 a month. That would be a sizable fee to go below. So not trying to scare you on that one, but just getting you to realize why that's important when we're looking at these rates to see, hey, they have a 0 minimum balance. That's important. It's going to help me out in the long term because I want to keep all of that interest. I don't want to give it back in fees. So there's one other thing that I want to talk about in terms of these accounts, especially savings accounts. So it's a big question that a lot of folks will think, but not ask, and you should ask. So just to clarify, some of the best rates that we have are actually not on savings accounts, they're on money market accounts. And that name, it scares you. You're like, does that mean you're putting my money in the stock market? I don't want my rainy day fund to be in a high risk account. That is not what a money market is at all. So money market, when we're looking at these high yield savings accounts or money market, different banks will call them different things. So this is SoFi's page. Synchrony has a great rate. We're going to get back to that one. I'm trying to click on all the tabs I have open. This is Ally. Ally's offering 4% on a money market. Most of these still have no balance requirements on a money market. But the difference between a money market and a savings account, and you may not realize this, is that a savings account in the United States, to be qualified as a savings account in most banking institutions, you may only have 6 withdrawals a month. Now, they do not count transfers. Most banks do not count transfers from the savings to your checking. So if you were like, I keep it over here, but I move it back and forth, they don't necessarily count that. They count it as you went to the ATM, that sort of access. But 6 and beyond 6, you're going to pay a fee. So you need to think about, how do I plan on using this? A money market account, just a savings account. It's not being put in the stock market. It's not at risk at all. It's still 100% FDIC insured as long as you're under $250,000 for one person or under $500,000 for a joint account. But the big difference here is that money market accounts, most of them down here in this corner is our difference. Most of them actually come with ATM access. They come with debit cards. They come with checkbooks. If you wanted to significantly have access to this money, A money market account actually has more flexibility than a savings account. And right now in today's market, a money market account also for some reason has a much higher interest rate than a typical savings account. So it's really kind of a best of both worlds as you're looking at these new accounts. So I'm just trying to give you kind of the lingo so that you know what you're looking at and you're trying to compare the right items. But just so that you don't automatically take that money market account off of the radar, this is a really great option. Now, for years, guys, on our weekly Q&As, just anytime folks would ask me, I've always recommended using an online savings account. And that is really where most of these best rates are. The reason for that is it does mentally make us feel like it's harder to get a hold of our money, so that I don't walk in and see something and immediately feel like I need to buy that right now. No, I don't need to buy that right now. I have a little bit of a hold when I just want to transfer money the old-fashioned way, even from these online accounts. If I wanted to transfer money from this Ally online money market account to my local checking account, keep in mind Ally offers checking accounts too, but there's technically like a 2 or 3 day window there. So it makes you feel like you have to wait a little bit. Now, you could grab your ATM card and debit card and you could make it happen, but our goal isn't to do that. So that's why I've always recommended them, just for that feel that access was harder. It's not really harder, but it is. The goal is to keep our money in savings, right? So whatever mental game you have to play with yourself to get it to stay in savings is a good thing. So that's been my recommendation. So let's talk about some of these accounts. Hello to April in San Angelo, Texas, and Michelle in Greenville. You're semi-close by. So hello from right down the interstate from you. So in terms of all these accounts, I mentioned Bankrate. That's where we started to find some of these best rates that are out there. Citizens has one of the better rates right now. If you've been looking at that one, this is online. This is not like First Citizens that might be down the road. That is an online Citizens bank only, so no local branches. But that's why most of these no local branches have some of the better rates. They don't have the overhead of those local branches, guys. They're literally a website. They still have employees, but they're not paying the rent and the electricity on all those local branches. So there is a perk to some online banks too. Citizens, SoFi, some of the top two. Ally that I just showed you as well in the 4% for their money market. So when you look at all of these, Citizens kind of wins at that 4.25%. I will mention interest rates can literally change daily. So when you open these accounts, it doesn't mean that they're going to immediately take you to a 0.5, but it does mean that this rate will come down. I can pretty much guarantee you this rate's going to come down. This rate is as high as it is because of where the federal interest rate is right now. Eventually, the Fed will drop the interest rate that they are charging to banks. And when that interest rate from the federal market drops, we will see bank interest that they're giving you drop as well. So the difference here is that they're saying, hey, we have to pay the federal bank a bunch of money to borrow money from them. So we would rather pay you money for you to give us your money. And that's just how banks work. So just so you kind of know that. So savings accounts, money markets, we've hit a lot of options there. I would encourage you, if your next question is, okay, great, Jenny, I've got, $500 in my rainy day account. That's all I've got in savings right now. Are you telling me that I need to move the $500 that I have in my local bank to an online bank? Kind of a yes and a no. I need you to kind of look at two things. First is, how often do you touch your local savings? So if you've got $500 in savings, I'm not talking like total to your name, but you've got $500 in a savings account, or you feel like you've got $500 in your checking that you could move into an account and you wouldn't miss, then this is going to benefit you. If we can put it there and not touch it, then opening another account, keep in mind, there's no fees to open any of these accounts. This isn't like I'm going to go out and buy a new car and hope that it pays off in the end, right? None of these places are going to charge you a fee to open an account. It's really, is it worth your time? If you've got $500 to put aside I'm pretty sure I'm going to be able to leave it there unless something tragic happens that is not on my radar. None of us can plan for that. Then I would say yes, this is in your interest to look into one of these accounts so that you can earn more on your savings. If you've got more than that, by all means. Now, do we keep money in our local savings account? Yes. If you're keeping your checking account at that particular bank, if you're going to move all your money, great, move all your money. That's a bit of a hassle. You would actually have to pay me a lot of money to move my checking account, not because I love my bank. I don't necessarily care about my local bank at all. No offense, local bank. But it is a pain in the neck to move your local bank and all of the things that you have set up as direct deposits or direct bill. I do not want to touch that. I mean, seriously, they'd have to pay me a lot of money or really, really make me mad. So this is what I want you to check with your local bank before you move things around is, do they have a requirement of how much needs to stay in your savings account? Remember, we don't want to get hit with fees. So just looking at their terms, you'll see it on their website. It's pretty clear because they're making it clear for people who open new accounts. Is there a fee if I go below a minimum balance on my savings account? If there is, then we want to keep at least that much in your local savings account. Move whatever else you think you can handle. If there isn't, then maybe you ponder taking that local savings account to just enough that, if I had a check that I wrote that I want to make sure that it can cover, however you might use your savings account, just a tiny little bit that you're keeping in there just to keep the account open. We're going to push everything else to that larger interest-bearing account. That's in your best interest. That's our goal, right? Okay. So lots of fees. Yeah, that's the hard part about banking. Believe me, banks are not there to just be altruistic and sweet, kind people who hold your money. They make a lot of money off of you, down to, guys, if you're getting paper statements, you better be looking at your paper statements because most banks even charge fees now every single month that they mail you a monthly statement. So it's time to be all digital statements, no banking fees. That needs to be your goal every single month, no banking fees. Okay, let's talk different accounts here. So we've hit savings accounts and money markets, kind of grouping those together. Most of the best ones are in the 4% to 4.25% rate right now. Top four, if I were to give them to you again, Citizens right here at 4.25%. You can head straight to these banks if you want to look it up. Citizens has no minimum fees, $1 to open account, very doable. You can direct link your local bank. You don't have to move everything to these. SoFi here, Ally being the other one. Oh, that was SoFi's page. Ally's page at 4%. Those are some of the top ones. Synchrony is another one that their savings account is a very good rate too. Synchrony's, I think, is 4.125% right now. So lots of options with all of those accounts. Let's talk CDs really fast. So I mentioned that interest rates are going to go back down. That's just how it's going to work. What's not going to go back down are CDs. And this is a rare moment for me where we are right now, what the current annual percentage rate is right now. I think if you'd asked me a couple years ago, hey, Jenny, should I get a CD? I'm actually pretty sure some of you have Wendy or a Wendy in particular. There are a couple of you. So keeping you all straight in terms of old emails gets hard for me. But I remember specifically asking, should we do CDs? Should we do CDs for retirement? And my response would have been no. Why lock your money up? The stock market's doing great. You don't want to lock your money up. Okay, well, this is actually a great example of a good time to consider getting a CD. And this is the reason. The savings accounts that I'm mentioning that are 4.25 and 4.15%, they're going to keep earning that for a while. But eventually, when the federal interest rate starts to drop back down, those savings accounts are going to drop back down too. And they may not go all the way back down to 0.5. They may kind of stop at 2%, but they're not going to be 4.25 and 4% forever. A CD will keep the interest rate that the CD is offering. So Synchrony right now is one of the better offers that we have. Synchrony is offering a 14-month CD for 5.15%. No minimum balance. Now, if I put money in here, I cannot get it back for 14 months. So whatever money you put in here, you need to consider it not your rainy day fund, but your like over the top cherry on the top of the sundae fund. I know that I have something that if something were to happen tomorrow, I can pay my car insurance deductible. If I got laid off next month, there are reasons that you can get out of a CD, but when you do that, you will pay a fee and you will lose a bunch of interest. So in the end, you should have never done it in the first place. Now, if you have a little bit of extra, and guys, this is no minimum balance. If you have a little bit of extra though, considering a CD right now is actually a great idea because you are locked in. That 5.15% is not going to budge for 14 months. So let's say you got an inheritance or you got a bonus at work. You got an extra sum of money you weren't expecting. I don't know, mentally, I'm not going to let myself know that I have it. I'm not going to spend it. This is an amazing way to not spend your money. I can't. I'm locking it down with fear of great bank fees to unlock it, loss of all my interest. This money I'm going to put in savings for the next 14 months. Now, this is actually one of the best rates that we have right now, and I will put this link in the comments for you guys. This is Synchrony Bank, Synchrony Bank, code. My poor husband got locked out of things, I guess. Sorry, I just saw that. With Synchrony Bank, your no minimum deposit and 5.15% for 14 months. The reason I said that this is one of the better options is that we see a lot of 12-month options right now. This one's actually 14, which is even longer. And you've got a 5.15%, which a lot of the other CD offers that we're seeing right now are still in the 4 to 4.5%, or like this guy, require a chunk of a minimum deposit, which we don't want. Now, 500 might not be bad. You may have that. If you're considering putting money into a CD, that's probably about what you would have, if not a little bit more. But you can see the other ones are starting to drop considerably. Now, let's go to local banks. I mentioned Bank of America, guys. That's Bank of America's current CD rate. And it's their current CD rate for a $1,000 CD, 0.03%. And the really sad thing here is that I can guarantee in the United States tomorrow, there are probably 100 people that are going to walk into various Bank of Americas and open CDs. And you want to shake them. Why? Why are you doing that? So local big banks, not really the way to go here. Definitely not your big tons of brick and mortar locations. They don't have that money. They're not offering the rates that the online banks are offering. Kelly's saying your local bank was offering 4.6. That I'm shocked. You should give them a shout out, Kelly. What is your local bank? Help everyone out. But most local banks are not where yours is. So you should, if anything, give them all a hug. You have a really, really great Bank of America, or not Bank of America. Sorry, I was reading someone else's comment. You have a really, really great local bank. Now, I have had folks mention credit unions, and that you should check with credit unions. They are known for having better rates than local banks, probably still not touching some of these online accounts though, guys. And one thing to make sure with credit unions is to check with them in terms of just their coverage, how they handle issues. There are some things that credit unions actually do a little differently than banks. So we used to be all credit unions. My mom, growing up, she was on the board for the credit union, so she probably still is. But we've had just some family experience that was very difficult in credit unions. So we are now back to banks. But that is something that you can kind of research and dig through if you want. And yes, not trying to bash any credit unions, just figuring out maybe how they handle some issues if you come into them is some research to do. Okay, so we've hit them all there. And Kelly's bank, to give them a full shout out, is Old National Bank. So good job, Kelly, for having a pretty awesome bank. Donna says her credit union had a good CD rate a few weeks ago. She got a $500 CD for 4.9%. That's a great rate. So good job on that one too, Donna. Now, one question I did get ages ago was CD rates for your retirement accounts. And yes, you can do this. So you can actually, if you have a Schwab, if you have, a TD Bank, wherever your retirement account is, you can actually buy CDs for your retirement account. And most of them will do this for you if you just access their customer service lines. They are offering some of these same rates in retirement accounts right now, so it could be an option. If you're wanting a stable place for your retirement funds, you're wanting to kind of wait out some of the craziness, because we're definitely still seeing it, you can do that too. So just to, take this a step further into retirement mode, you can do that. You can put money from your retirement accounts into CDs. Now, I don't mean like you pulled it out of your retirement account and you went on to Ally and you bought a CD. I mean, you did it inside your retirement account. So just so you're aware of that, it's like with extra cash funds that you may have sitting in your retirement account, it can legitimately go into CDs. Okay, not taking it out though, just so that we're all on the same page. That would be very bad advice, not good advice. Okay, we've hit a lot of folks, or a lot of things so far. I saw someone ask specifically about annuities. So Karen, with annuities, and I'm not an annuity expert, there are a lot of folks who love them. There are a lot of folks who hate them. You want to kind of figure out what your options are and do some research with annuities, but there can be some very good returns. And I'm just going to leave it at that. This is really a retirement thing when you're talking annuities, not really a everyday savings thing. And so I honestly want to just say, you know what, that's one to take to a financial planner or an investment planner beyond just your local savings account. But you're not going to go and open an annuity to just put, $500 or $1,000 into. So it's kind of a whole different conversation there. But it can be something that you want to look into. It's very stable. You're going to always get the same amount. So the stock market may do really, really well. You're not always going to benefit from that. It's like budget billing, basically. You're just saying, here's my money, average it out with a pretend interest rate, and they're going to pay you that flat amount forever. Just keep in mind, the pretend interest rate isn't going to stay that rate forever. So that's the 30-second view. There's a lot more there, but that's where we'll stop on that one. Sorry, guys. Okay. Oh, and April's saying, I was just typing about annuities. So there, again, the 30-second view, where the looking down from the mountain view on annuities, but that's the gist of it. And there's a whole different side of it. So I guess I can even show you this one. This is Fidelity, which is where we used to have a lot of our retirements. But it even breaks it down too. So you get income annuities, fixed annuities, variable annuities. There's a lot there. So it's more than just kind of a quick, yes, you should do this. Most folks are in these categories, income and fixed, when they are dealing with full retirement, your full retirement age. It's safer. It's a way to basically use something that's not bonds. If you're saying, bonds are boring, that's what everyone says. They're boring for a reason. There's no risk. Then this is another way to take risk out of that too. It's just another option to put on the table, but I would encourage you to talk to your financial planner or investment planner on that. Okay. So to back up, there is one thing I didn't mention yet, and I should. You have 2 more days, no pressure. If you were wanting, we mentioned it a little bit last week, but if you were wanting I-bonds, You really want to make that purchase before April 30th, so no pressure. But as long as you purchase I-bonds before April 30th, and I say 2 days here, it's April 24th. I know what the date is. They actually cut off new accounts as you get closer to the end of the month, because the way that this works is that you literally will get paid this interest rate on April 30th, even if you just opened the account. So kind of fun. The interest rate will then accrue in the account. You're not going to get that money back. It's going to be invested into bonds or more bonds. But on May 1st, this rate's going to readjust. It will not be 6.89% on May 1st. It will be probably about a 4% rate is what everyone's assuming. Still a 4% rate, and it will be locked into that for the next 6 months. And then come November 1st, it will readjust for the next 6 months. Now, I-bonds are linked, their rate, so the 6.89% is linked to the U.S. inflation rate. So it is possibly set to go down to 4% on May 1st. It's not going to go down to 0.5% on November 1st when it resets, but it is locked into that rate for the next 6 months. With I-bonds, I would mentally think of them like a CD. Your money needs to stay locked in here for 12 months. If you remove it after 12 months, you'll lose a few months of interest, but there are no fees to take your money out. There's also no minimum here. You can purchase up to $10,000 worth of I-bonds, but you can purchase as minimal of amount as you would like. So $25, you can do that. In I-bonds, you're going to earn 6.89%. On this first get-go, and then it's going to readjust, and you're going to earn about 4% after that. You can also continue to invest here, so you could put some money in this month, some money in next month, keep going. Your max is $10,000 for the year, so just an option. And yes, so L Rose is saying treasury bonds are always a good investment. They are. This one it's not always a really pretty one, but this one has been incredible for the last year and probably will continue to be, definitely will continue to be over the next 12 months, if not longer, over other bonds. So just an option here too. So it's kind of in that same rate as a CD in this boat. So if you're looking at a CD that's even in like the 4.5% range, these two average together, a 4% and a 6.89%, is basically going to be like a 4.5% rate that you got on your money as you got going. So it is a good choice to put on the list of choices. So savings accounts, money or high yield savings accounts, that's really what we want to look for. Money markets, which are giving you more access to your money than a savings account is. CDs, preferably looking at that 12-month or 14-month synchrony is the one that I showed you earlier with that 14-month 5.15%, or I-bonds at 6.89%. So lots of options to put money. If you're interested in I-bonds, I will stick this in the comments for you guys too, but with I-bonds, the only way to purchase those is directly through the Treasury, so the U.S. Treasury. So you're going to go to treasurydirect.gov. Okay, we've hit a lot already in terms of savings. I want to talk about how do we increase the money that's going into these savings accounts. So one easy thing to do, two, let's hit two. First off, if you work for a small, medium, or larger size company, go to your HR department. Guys, literally, like, I'm a small employer. I have a few people who work for me. I can do this. So I bet your employer can do this for you. Go to your employer and say, hey, every month or every time I'm paid, I want 10% of my paycheck to go to this account. And I want all the rest to go to this account. You can do that. It doesn't have to be 10%. It can be 1%. But you actually can automate savings directly to your savings account. So most employers that are using any sort of payroll system and not like literally charting it out on a piece of paper themselves, most folks are using some sort of payroll system, can automatically assign payroll to go to multiple accounts. This is by far the best way for you to get more money in savings because you're doing it not at the end of the month when I had extra money left over. I'm doing it at the beginning of the month. I'm doing it as soon as payroll hits, because now when I look at my checking account and I see, oh, I got like $800 in the checking account, and I still need to pay this and this and this, I don't automatically go out and spend money. Now, if you had put it all in the checking account with the intention to move it to savings, if you see that total balance though, or your husband sees the total balance, or whoever is also in your checking account, this can be a problem, because mentally we see, oh, I've got money, I can purchase this. And these kind of whim purchases, they add up, even if it's Starbucks coffee, guys. So automating your savings directly into a savings account. This is, again, outside of your checking account bank, because I don't want to even see them next to each other, right? I don't want to see all my account totals right there. No, I want it somewhere else. Somewhere else I even have to log into separately. That's another perk of these online accounts. Now it's there, it's building up, but I don't have to worry about it talking to me and convincing me to buy things. If that's how you view your savings account, everything's out to get you. But you get where I'm going here. That is a really easy way to do it, directly from payroll. Now, you can actually do this inside your bank too, so I can set up automated transfers. So every time, every other month, every other week, whatever you think you can handle, we are going to automatically move $200 from checking to savings, or from checking to an online savings, automatic monthly transfers. Now, I would encourage you, if you do that, don't set it and do not touch it. Treat it like a bill. It's going to come out every month. I need to make sure I've got $200 to handle that transfer. Really, you're paying yourself, but if you treat it like a bill, you won't turn it off, because that's our worst enemy, is us being like, oh, I don't know if this month I can handle that automated transfer. I'm just going to pause it, and then you don't turn it back on. So no matter how you do this, the payroll option, a little harder to turn on and off, because eventually the HR department or your boss is gonna be like, look, stop coming in here. This is what we're doing, right? You're not gonna want you to adjust that every single month. If you don't feel like you can handle that one though, the automated transfer, just set it and do not touch it. Leave it going so that the money is continually going in that account. And I use the example of $200 a month. That's a lot of money. So if you can't handle that, if you can handle $25 a week, that adds up to $100 a month. If you can handle even $10 a week, sorry guys, you're still at $40 or $50 a month at the end of the week. End of the month. They all add up. So whatever you think you can handle is a big, big way. A sweet story from years ago in couponing. Keep in mind, I've been running Southern Savers now for almost 15 years. So this was probably like 12 or 13 years ago, but this was a sweet old lady. She used coupons religiously for everything that she purchased, and her husband always made fun of her for it. And so every time she would go to Publix, she would pay for her groceries full price. Then she would go to customer service and hand them her coupons. And they got very used to her. They were totally fine with her doing it in this order. The reason that she did it in this order was that back then, and they probably would still do it for you now, Publix would hand her that amount in cash. So she went to customer service with her receipt and her coupons and all that coupon value. They would give back to her in cash. Well, she would show her husband the receipt from the groceries, not the receipt after the coupons. And all that cash she would put into a savings account. And every year she would go on a vacation by herself. So go her. But it is a way, I'm not saying that needs to be your goal here, but it's a fun way to see even what my little bits that I can do can add up. So maybe that becomes your goal with Ibotta or Fetch or some of these mobile apps that we use. You know what? I'm not going to do a direct deposit to the checking account. I'm going to do a direct deposit to the savings account for my Ibotta amounts, my Checkout 51 amounts, all of your options there so that you can start to see that savings add up. maybe it will help keep you motivated to save even more. She was definitely motivated to save more on her. I think she went on a cruise. That was the last one that she told me about, using all of that cash. Meanwhile, her husband just thought here's the grocery receipt, whatever. I won't use coupons. She was doing great with her coupons. So have it all add up in some form or fashion to encourage you to keep saving more. Not trying to drive Publix crazy with everyone now using their coupons in a whole different fashion, but it is a fun way to kind of get us to think about even how much those little purchases can add up into our savings account if we were to literally take the savings and save it. That's our goal, right? Okay. So as you go through, if you've got any other questions that I haven't hit on, please feel free to chime in on them. But as you ponder, what account do I want to look at? Again, your goal here is a minimum balance that's potentially zero. If you're okay with a minimum balance that's $100, and you feel like the interest rate is worth going for that, that's fine. But most of these are really a zero minimum balance, so don't feel like you need to dive into one with a higher balance. We want to look for CD rates that are the farthest out we can get. So 12 to 14 months is about the best you're going to find for these really high value rates. If you wanted to go further, I've seen 2-year and 3-year rates that are in the 3% range. The reason is that they know that this rate's coming down, right? So they don't really want to get you locked in 2 or 3 years from now into a CD that they can't even afford, because that's not the going rate of lending money. So that's why it is those 12 months and 14 months are kind of our best option right now. And Stacy, have I heard of the Pogo app? I feel like that is one that I've looked up and researched before, but it's not one that is coming to mind. But I can definitely dig through and give you some feedback on it if you want me to, and send you like a Facebook message after the fact, Stacy, or we can even talk about it next time. Okay, great question, Kimberly. So if I took $25,000, that's a lot of money. If I took $25,000 and I put it into, let's say you put it into a 14-month CD at 5.15% interest, that is going to make you, that $25,000 is going to make you $1,287.50 in interest just on the first 12 months. That Synchrony Bank one has got an extra 2 months tacked on that you're going to make even more. But that's it. That is just the interest. So you put in $25,000, you made $1,287.50. That's a pretty great chunk of change that just sat there. It had no risk, but it had a really good gain to it. So hopefully that helps you to get an idea. Based on your local bank, if I kept $25,000 in the local bank that is earning 0.0 or 0.5%, 0.5 versus 5.15, $25,000 in a 0.5% savings account is going to make you $125 in interest versus $1,287. That's a huge difference. Now, again, $25,000 is a lot of money, but it helps you to see it on a grander scale, right? $125 in the local 0.5% interest savings account versus $1,287 in the 5.15% interest. So big difference. And Kimberly says, I keep too much in my savings account. I think a lot of us do, Kimberly. You're not alone. My husband and I, we've been having that same conversation. What is our comfort level that we could just put into a CD and we could lock some money away? I think we all have that fear that things could come, and then they do come, and that doesn't help. So us and the, a kiddo getting into a car accident, but there's still a comfort level. So for you, Kimberly, if you've literally got that much sitting in a savings account, I would still encourage you, you know what? Let's keep $2,000 here local. If that brings you some peace, I know that I've got $2,000 that I can reach, and let's lock away a chunk, or maybe not do the CD, but do a savings account for a chunk of it. Do a CD for a chunk of it. You can always piecemeal this out, but we definitely don't need that much in a savings account when we're talking over $1,000 difference between the CD and the local savings account. It's pretty huge. Okay. Well, I knew in choosing this topic that we may not go for a full hour, and we've hit all the things that I wanted to hit on tonight. My goal here was just to encourage you to at least one bit of homework to go and look up what the current rate is for your local savings account, because most of us don't even know that. So if that's all you do tonight is you pull up your local savings account and you're like, yep, Jenny was right, it's paying me 0.5%, then I've at least put some things in the back of your mind that hopefully are gonna be a little bit of a needle poking at you and reminding you, hey, if we've got any bit of extra, we need to get it out of this account. So that's your homework. Look up your local savings account, see what you're currently earning with it. I imagine it isn't going to be pretty. And then ponder your options. So we put a lot of links in. Head to Bankrate, head to Synchrony. Synchrony does have some of the better rates that are out there. And Kimberly, if you really do have that chunk of money, I may even head to this one that I showed you earlier, which is UFB Direct. And I will stick this one in the comments just for you, for anyone that does. UFB Direct does have a $5,000 minimum deposit, though, just so you're aware of that. But this is a 4.81% interest rate, so it's even better than a lot of the money markets right now. So it's about as high as you're going to get in money market land. And that's not a CD. So keep in mind that the perk of that CD was that you're locking in that rate. It won't change for 14 months. Savings accounts will, but that could be an option too. And Barbara, sorry, I don't want to miss your question. So Barbara, how long should you keep money in an Acorn account? So you can keep money in an Acorn account forever. Acorn accounts are actually in the stock market. They're earning based on what the stock market is earning. There is no length of time that is a wrong time. Ooh, I'm clicking buttons and making things go away. Sorry, guys. Won't do that. I thought I was on the wrong screen or on a different screen there. So Acorn accounts are in the stock market. They will just keep investing, and Acorns can be a really great way too that you can automate that savings. So we actually have an Acorns account. It only puts $10 a month into the account, but then you can also have roundups on every purchase that you make. So for example, if you spend $6.45 in Goodwill, then 55 cents are going to end up in your Acorns account in the end. You can do that, and it earns what the stock market earns, or based on the investments that you've chosen to do. So we do have a Acorns account, and I have had one for a couple of years now. So I'll actually share that with you guys if you want to know. This is my Acorns account. I've had it for, I think, about 2.5 years. I put in $10 a month, or sorry, $10 a week, and roundups. That's all that's here. Now, the stock market has not done well, and I told you guys that. It's not done well in the last year. So we actually lost a little bit, and haven't had, it kind of stagnant is where it's been. So I've had about 3% growth on this, but still in terms of just a savings account, it's still a great way to get a chunk of money put aside if you feel like that's a better way to do it. Maybe you should look at it this way too. Maybe your goal isn't Acorns, but it's just to start saving money. This is $10 a week. That's it. I think you could find that. $10 a week. This is, I didn't eat out, or I didn't get a coffee at Starbucks. I don't ever get coffee at Starbucks. Whatever it might be for you. But I just want you to put the money into like a visual of how it adds up. No, that's not 1 year. It's really like 2.5 years. But it's still, it's added up, and I don't touch it because it's in that Acorns account. It's not super easy to get back out, right? I got to transfer it out. It's in the stock market, so I've got to sell the stocks to get it out. But it's a chunk of money that got put aside with really no impact on our budget whatsoever. So maybe that's one way to look at it, not in the sense of going and starting an Acorns account. Right now, I think it's a great concept. There is a monthly fee, and with the current stock market not earning a ton, I cringe at the monthly fee. So it's really up to you. But I just want you to have the motivation to at least start somewhere. Little bit every single week or every month, automatically going into savings. By far the best way to save money. That's what you are doing, right? We can all cut coupons. We can all try to shop the deals, but literally not spending money is the best way to save money. So that's why I wanted to talk about it, this particular topic tonight. I know it's not necessarily couponing specifically, but our goal here is to save money. So we definitely hit it. Okay, I'm going to go ahead. Oh, sorry, one more. What do I think of ETF funds that follow the S&P 500? I actually love ETF funds, Josie. Now we're talking like true stock marketness, but ETF funds, if no one knows what those are electronically traded funds. They're basically mutual funds that have been created that don't necessarily have a manager behind them. So they don't have any fees behind them. A lot of mutual funds can be really heavy on front-loaded fees or even back-loaded fees, and you need to look at their fee structure. ETFs are really, really low fees, if not none, because it's basically, in a sense, it's like the buzzword right now, it's like pre-AI, because it's not AI, but in a way it is. It's like computers that are running mutual funds, and so it can be really low fee. Following the S&P 500 is a great one to follow. It is going to be predominantly what the market does and is hopefully going to have some good low risk earnings for you. To be in the S&P 500, those are some of the top 500 companies in the world. Those are not not super high risk companies. This isn't all small cap, mom and pop, brand new to the stock market companies. I mean, they barely accepted Tesla a couple of years ago into the S&P 500. So these are huge companies, and it is a lower risk place to be in the mutual fund world and in the stock market world. So again, her question was an ETF that is following the S&P 500. You can Google that. There are a number of ETFs that are designed to do that. Look at their 1 year and 5 year returns. 1 year return is going to be pretty abysmal on everybody right now. So you want to go out to that 5 year return and look at their fees to get some ideas. And anytime we touch this is where my husband will make me say, I am not a stockbroker. I am not an investment planner. I'm just someone who likes investing. So just to hit that one too. Okay. And Kathy says, I need to pull some money from my 401k from a former employer and have no idea where to put it. So, two big questions for you, Kathy. First off, when you say pull some money from a 401k from a former employer, are you 59 and a half or older? If you are not, then you need to roll that money into an IRA or a current 401k at your current employer. Honestly, you should never do that one. You should roll it into an IRA. Anyone that has an old 401k and you have A, left it with your old employer, or B, considered rolling it into your new employer, really bad ideas. 401ks have a lot of fees that get passed on to the employee. You don't even realize that as the employee, but they do. So anytime you leave a business, automatically rolling that 401k into an IRA that you are in control of, meaning there are no fees. And if there are, you know what they are. Very, very good thing for you. So don't ever roll a 401k from one company to another. There's no incentive for you to do that. Your new company is not going to match your 401k. You don't want to do that. So if you are, good. So Kathy's 64. While I gave my little soapbox spiel there, Kathy, I gave you time to answer. Okay, then that's fine. So you've got to pull the money from the 401k. You don't know where to put it. Honestly, what I might do, Kathy, in this moment, the stock market isn't amazing. We've got a lot of folks that are saying that we're gonna see a recession. We're only a month away from recession is what most talking heads are saying these days. I would probably pull that money out of the 401k and I'd actually put it straight into a CD, and I would deal with this in 14 months when the CD ends. Now, the minute you open the CD, for anyone that does this, if you do not plan to keep it, you need to put that on your Google Calendar or whatever you use as a calendar, CD renewal date on your calendar, because all CDs, they kind of get you. This is the one little warning with CDs. You have a 10-day window to notify them that you don't want the CD to renew. And odds are 14 months from now, that CD is not going to renew at 5.15%, right? So put the renewal date on your calendar so that I can say, yep, I'm done. I'm going to go ahead and move it from here. Now, if you don't need, or is that going to affect your taxes? So yes, Kathy, pulling the money out of the 401k is going to be considered as a taxable event. So you would owe taxes on that. You could take it and put it into an IRA if you wanted to. And as long as you move it and put it into an IRA within, I think they give you 60 days now, it is not a taxable event. Just consider that if I put it into an IRA, I cannot touch it in a traditional IRA for a period of time. So I don't necessarily want to roll it over if I need it like next month. So research how long you need to have it. You don't want to do a Roth IRA. That would also make a taxable event for you. So if you're trying to avoid those taxes, you're going to want to look at rolling it into a traditional IRA. If you already had a traditional IRA, you can totally roll it into that. And take literally the required distribution from here and just move it over there is fine. There's one other option. I'm being like your own personal financial planner here. If you have a health savings account by chance, or a high deductible insurance account, because you're 64, so you don't have Medicare yet. So if you have a high deductible insurance account and you have an HSA plan, there is a one-time HSA payment that you can make from a 401k or an IRA. It does not make a taxable event, and it allows you to move that money from a 401k into an HSA plan. So that's a health savings account. Health savings accounts are still in the stock market. They're still earning a good amount. They can only be used for health needs, but it's pretty wide there. So it can even be used later on for like insurance payments. So as you go into Medicare and you look at your Advantage plans, you can literally use HSA money that you've saved up for years towards those insurance payments. So there's a lot of options to use that money, but hopefully that gives you some ideas. Okay. Ooh, Lynn, on a future video, can we talk about when is the best time and age to start drawing Social Security? I can actually hit it right now on a quick 30-second one. Literally, for most folks, it is the longest that you can push out. Looking at if you can go out as far as 72, that's ideal. It's not for everybody. There are a lot of online calculators, and I would encourage you to become an online calculator player and just running all the numbers and figuring out what all the options are with those calculators, but seeing where you fall. I would say in terms of the majority of the population, I would love to just make up a number here. I don't know what it is, but I would love to say like there's only 1% of America that would actually have a legitimate gain from withdrawing Social Security at the minimum age. No one really wants to do that unless somebody has told you that you have 2 years left to live. We really want to push this out. The difference in your Social Security payment becomes pretty significant for every year that you delay taking Social Security. So pushing it as far as you possibly can for most folks is in your best interest. I don't mean like we're going to eat beans and rice for the next 2 years while we wait to take this either. So definitely ponder your living conditions and how far you can, seriously make that call. But trying to get it as far out as you can, or for one of you, going ahead and drawing now, if we need it right now, for your spouse, pushing that one, or the other way around. See, again, using those calculators, which one of you is going to benefit from the longer wait. And usually it's the person who's going to earn the most. So if one of you had a higher last 3 years, all those calculations that go into it, that's usually going to be the person that you want to wait to start claiming on if you can. Okay. And Anna, so you guys, it sounds like we just need a whole retirement video. Her husband has to start taking required minimum distributions this year, and nothing about this. So again, this is there's a lot that you can go digging into with retirement required distributions. I would encourage you, again, Anna, look into HSA plans, look into a lot of other options for you. If you have that high deductible healthcare account, I can easily move money from the IRA into the HSA to pay that $7,200, literally taking it out and then putting it right back in. It comes off the top on your taxes as a, reducing your adjusted gross income. So that's one thing you can do. There's a number of others. I'll actually work on writing up a post on this, guys, for you, and we'll see if I can get it up in the next week of just some tips for Social Security and required distributions. It's not a topic that we hit a lot because I get a lot of folks who are more like, hey, I need to save on diapers, but we will definitely go there. And Josie says, can we open an account for our children for the FDIC insurance? So I guess I'm not quite, so all savings accounts and checking accounts in banks are FDIC insured, if that's what you're asking. And with those accounts, your children are considered as a individual person. So everyone in a bank is insured up to $250,000 per individual person, or $500,000 per joint couple in a joint account. So a children's account, it even depends on what that children's account, how it's listed, but could potentially be considered a joint account if you're on it, and not just someone who has access to it, but it's literally in both of your names. That would be insurance up to $500,000 on the value of that money. That is all that FDIC insurance is, though, is just insuring this money that I've put in this bank. It's not beyond that amount. It is just for whatever your current deposits are in a bank. So children's accounts are going to be good. Not really going to have any issues there unless your family is like holding some significant funds in a bank. If that's the case, then you probably should diversify and have money in different banking accounts in different banks just for safety. Okay, we've had a lot of questions there at the end. Hopefully that helps you guys. I will try to hit the post or get the post up on required minimum distributions and Social Security, just a general retirement tips post, and hopefully that will help too. So thanks for joining me tonight. We are not going to have a Q&A next week. Going to take a little bit of a break for some birthdays around here, but we'll be back soon. I will be back on tomorrow for our normal drugstore video at 1 o'clock. So Tuesdays at 1 for all the top deals running in CVS and Walgreens. So hopefully you can catch that live or catch it after the fact. It's always recorded. There are a lot of deals in both stores this week. It is a fun week to hit the drugstore. So hopefully you can join me for that too. So I hope you guys have a great night. I hope you guys also look up what your savings account current rate is. At least do that. I promise I won't quiz you, but I don't know. If you ask any other questions, I may be like, whoa, before we do this, what was your savings account rate? We need to know it, and we need to make sure that it is a decent rate, guys. So thanks again for joining me. Oh, Janelle, one last question at the very end. How do you get your money out of an online account? Super crazy easy, Janelle. So a lot of these accounts are actually going to give you they're going to give you ATM cards. They're going to give you checkbooks. It depends on the type of account that you start. If you start a savings account, which only gives you 6 withdrawals a month, then they will have you direct link a local bank. That's how you'll put money in and how you'll take money out. So that's literally part of the account setup. So very, very simple and is a step. They will not let you miss it because it's the only way you're going to put money in an online account. And it works both ways. So once the account is linked, we can move that money very easily in and out. Hopefully just in though, right? That's our goal. Okay, gonna hop off now. Y'all have a great night, and I will